Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll do our regular market update, update our earnings trades and then do some charts stuff to go through. So that's what we're gonna do. All right, let's get started. So big news here. You can see NASDAQ went to 2, Russell, SPX still holding. We'll go through those charts. I didn't pull up NASDAQ. It just went into state 2. Overall high went from around 61 here to right below the 50 yard line there. So 46, a pretty big drop over that week. Just want to point out dollars. Yeah, we had a big run up in the dollar before. That's something to keep our eye on. Obviously, that's a headwind for stocks. If that thing gets going, I pulled up that chart so we can take a look at that also. But other than that, the bonds are getting beat up pretty good. The rates going higher and holding pretty high. I think those right now 424 about. So the 52-week high is 433. We're getting up there. Obviously another headwind for the market. So let's go through the market pulse here. So you can see about a month ago we got up around 77, been a straight line down pretty much. So we did get to cross. So that was yesterday, got the cross 46. So really just we have to see if it's going to be one of these type situations where kind of levels out. So we'll have to watch the market pulse to see if things really start slowing down, or if we do get more of a pullback. We're on pretty much kind of right near key support levels for the indices. So kind of watching this, and then those levels will let you know. I think if those levels break, we could see another 100-point swoop in SPX type thing. And get a bullish coming down pretty good, and then we'll find a bottom obviously, and up and back and forth, kind of just how it goes. But we'll have to see in the next few days. I think that'll be key to watch. We look at the individual states. We never got over that 45% for state 1, but we were right next to it. So that was a pretty good call. I think right around 44, 40. So that was stopped there. And the straight line down, we're getting a lot of 2s to pick up here, and 4s, just kind of like on the way up. When 7s go to 5. So what we really want to watch is 4s to see if this is going to be a deeper one or not. So keep your eye on the 4. Obviously, all the 1s are going into 2, and then a lot of the 7s are going. That's been this steady decline since the 19th, about a month. Just 7s going down. So some of those went into 5 right in here, but then just picked up into the 8s. Starting here beginning August. So I think really what we just kind of want to watch is is this going to be a normal pullback? And I think we could even drop a little more from here, get into 2s, and then see what happens. But overall pie, see if it holds at these levels. If not, then obviously we're going to go lower here. I think one thing that's encouraging, bullish wise, is we're not seeing these huge spikes yet in the new lows. We had these nice bullish peaks here with the new highs, and we've had a couple ugly days, and not too many new lows. So that's something, another thing we can keep our eye on here. Obviously, if we start seeing these huge new lows, that could kind of change our opinion on, kind of intermediate trend right now. So, so just watch, these transitions, how deep are they going to go, twos, kind of watch the fours, I would say. So that's it for market pulse. These 200-day moving averages obviously we had great separation here, and it just came all the way back. So we're back to pretty much break even, and then pretty much mirrors the pies. Bullish bearish overall kind of mirrors those. So just like another confirmation. Oh, let's look at the actual states. So SPX been here a long time, 90 days. How much? What's the average, Joe? Do you recall offhand? I think you said 100 something for those long runs.
You mean for SPX? Yeah, the average is like 126. The range is basically 100 to $1.45.
Okay. Oh, it's getting long in the tooth. I think the chart, obviously, we have a key level we're at right now. I'll just pull that up. 50-day, we're pretty much right on it. 44.31. We're pretty much, right on that, testing that as we speak. So that's something to watch. If that breaks, obviously, next leg down is 43.40. It's about another 100 points from that 50-day. That would be target 3. Where we get this whole, secondary run started here, when that turned into support. So that'll be, key support 14.40. If we do, continue lower through this 50-day, and at that point, I would expect
today. We're at 44.18 right now.
Yeah. I'd say, watch the close. Yeah. Obviously these things get tested, like this one here. So the 50-day was 40.66. We got low of 4.40.48, close right below it. So, I'd say the next day or two, we should know. But if it goes below, it doesn't mean it's broken. I think, the next two closes really what we want to watch, right? So other than that, big picture wise, pull up. So top of the range, 46 failed. So below that would be our 4,200. So we're getting near middle of the range. Key thing to watch. Obviously the 50-day, which we're below right now. Next level below that you can watch is that 43.40, and below that's at 42. Kind of in this target range. These don't really hold up as much on the way down. So I'd just say, that 42, the bottom of the range, 4,200. So 43.40, your 50-day, 43.40, and then 4,200 below that. So, we'll see if this holds. Not sure. Don't have my crystal ball on that. So I'd just say within the next few days, we'll know if that's hold. You can see all these tests are like, it's like a 1 day. Okay, close below, next day shot up. Here barely. Didn't even touch it. So, obviously we're below. So the next day or two, I think we'll know. But this is obviously a critical level. It's 50-day, as you can see, been support all the way, from the bottoms here back in March. So big thing to watch. If that turns over, obviously, target 3, I think would be next stop. And then below that's, the bottom range 42. So Russell, pretty much straight move down this month. That's July 31st. As peak of this move, pretty much just stepping down every day. So now we're below entry price. So in 1914, and we're right below that 1900 as of the close. I think we're lower today. So 1900's key level. Same kind of deal with the SPX. Next day or two, we should know. We're trying to hold it 1885. So trying to hold that. We're about 7 points lower from, oh wait, actually 12 points below here. But we did make new lows from in this state. So, down below would be this level, these stop levels, 1860. Really want to keep our eye on this 19, see if it can get back above there. What it is kind of looking a lot like is the past 3 breakouts of this 1900 level. And I'll show you 1917. So, 1, 2, 3, looking fairly similar, especially on the way down. You can see these things go all the way down. This test support held on for a little bit longer, but this one took a little bit longer to get up. This was straight move up, almost straight move down. But this is these are all lower highs. This is marginally, almost made it to 2008, but got up like 2003. So now we're on right below that 1900. We've been talking about that a long time. Key level. So if it holds, obviously it's going to be very bullish. If not, then we're back in our range of 19 to 17 yet again. So if these two things hold, I would expect pretty strong bullish moves off of that. If not, then I would expect pretty decent drop. SPX, maybe testing the bottom of that range, but at least getting down to this target 2. If these things break. So that's it for Russell. NDX, obviously, state 2 just entered. Not a big mover here. On average 2.73, and the average path is going to describe here like that. So that's kind of the average. From here, historically, about 70% the time we go back into state 1. So, I think bigger picture, we're kind of watching, okay, is this going to become more of a bullish market? Where we're going 1, 2, 1, 2, 1, 2. So, this first one into state 2. So that's something to keep our eye on. If we start getting into 1, 2s, obviously it's very bullish overall for the market. It's a headwind, UUP, dollar index, dollar ETF. It's had a pretty strong move. It's kind of been range bound. Just wanted to bring this up, like, this huge run up. That we saw was really like a headwind for the markets. We had a retracement here, kind of leveled out. Now, we'll have to see if we start popping above kind of the range it's been in here. So I think we're near the top of that range. 2067. Yeah, so we're right. The highs are right near those kind of top of this range. So we get a breakout with this. It's obviously headwind for markets overall. Most of the international ones, I don't want to see this. So keep your eye on that. In the 10-year, obviously, been strong. it's a headwind for, these balance sheets that people have. You can see here, 52-week high, 4333. That's back here in this October timeframe. So, this has been climbing, headwind for the markets. So, if the dollar kind of kind of stops, turns around, same with like the 10-year, then I would see things bouncing. If these things continue rising, I would expect things to break through, and go lower. That's kind of been my thesis here. Fed, this not much happening here for the Fed meeting. It's kind of flat expectation wise. I think the numbers reflected that. Came out last week with inflation numbers were pretty much as expected for the most part. Fed balance sheet, not too much. We get these flat week or two, and then they resume downward. So they continue running us off. This is a headwind, bearish for the markets overall when they're tightening. So raising rates. So Fed's still doing what they're say they're doing. I didn't check the expectations to see in the year. Just thought of that. Yeah, so little movement, not too much. So maybe this would be one more hike, quarter point by end of year. Pretty much 60% for nothing happening. So, just a balance in between there. We'll see how inflation numbers come out, but it's all data driven at this point. Whether the Fed, you guys know my opinion. You should have held a while ago, but and yield curve. So these have all come up, these longer term rates. So we're about 0.8 inverted between the 2 and the 10. It was at 1, so it shrunk, but that's just because its 10 years come up. So these have all come up. You see, a year ago, 10-year was 2.1, 2.8. So you bought a 10-year a year ago, you're in the hurt locker. Unless you plan to hold that to maturity. So that's the problem with a lot of these banks. You buy a 3% 30-year, now it's 4.3. You just lost 10, 15, maybe 20% of your premium if you want to liquidate that. So that's where the banks, just keep your eye on these banks in case anything starts coming as these rates go up. I think we talked about Europe. I can't imagine some of those negative bonds that people bought, what those are worth. I think that was it for the markets. Joe sent like an interesting little thing. China did a cut of interest rates. Obviously, that's kind of a little red flag. If they do emergency cuts, trying to stimulate the economy. So keep your eye on that. And I think that was it for market. I'll open up to questions, comments.
Most of the data coming out of China is suspect.
Oh yeah. Grain of salt.
Yep.
Read that stuff. Yeah, I agree.
Hey, Josh, this is
Mhm.
Dave.
Hey, Dave.
I think the best point, or the one I heard the most is the 3 tops that you mentioned, and you kind of like we haven't broken up. We kind of like are similarly retracing after the run-ups.
Right.
That looks pretty consistent, and when I look back at what was the reason for the first 2 run-ups, I think it was mostly investor sentiment and hope that, you know, the Fed is done raising rates. Well, we're done raising rates, and then they weren't, and then there was a sell-off, and
Right.
then, well, there's not going to be any more. Then there was another raise in rates, and it's a sell-off after that. And so those are in my opinion, the reasons for the first two run-ups that weren't really justified by that much by earnings, but by, you know, sentiment and, you know, the end of the Fed raising of rates. So I was in the camp of I expected say a melt up like Sadir had mentioned. That's what was happening when no new bad news was being portrayed.
Mhm.
But it's rolled over recently, and I think the last run up, it was kind of like due to the Magnificent Seven, as they say, and the AI flap, because all those companies were all touting huge investments and potential returns on their artificial intelligence investments.
Yeah.
And then during the last earnings report from the likes of Microsoft and some of the other ones in that very camp, it's like, well, maybe they're not going to be manifesting in the next quarter or so. And I think that steam is kind of like falling out of the balloon, and is kind of partially the reason for the recent rollover. Just happened a little sooner than I thought. And, you know, we have the FOMC non-meeting that's in September, but they're going to talk, in my opinion, probably hawkish, because they kind of have to all the way to September, since there's no August. It's Jackson Hole in office in August, and not an actual FOMC meeting. So we'll see where NVIDIA reports, I think, next week. And so most of the AI enthusiasm was going to that stock. We'll see if that holds up or not. If it doesn't, then I sort of expect kind of like more fade to the downside up to Jackson Hole and through Jackson Hole than otherwise. If they report really great, then maybe there's going to be some enthusiasm up to and through Jackson Hole. We'll see. That's my opinion. And I've been following Apple, and, you know, as Apple goes, the big indices seem to follow. So
Yeah.
I still stick with that as my key barometer of a stock to give me sort of sentiment on where everybody in general might be thinking. Just saying. But anyway, I really am right behind you on the last three run-ups and then retracements. I would expect this current one to follow a similar path, just like you said. Right on with that. Anyway, my opinions.
Yeah. I mean, all these, like, went testing the bottom of that range, and they're pretty drastic moves down. I don't, you know, let's see if 19 holds. You know, really, I think, you know, this 10-year and dollar, just kind of have to watch that. Yeah, earnings obviously important. So, and yeah, Apple's a key driver, obviously. So, you know, this one's been 8787 that, you know, turned into, you know, came off the bottom here, 751. So now we're in 2, right? So that's what I talked about. Okay, we go back in 1. I mean, that's kind of like an all clear. We start seeing 1, 2, 1s, you know, especially for indices and Apple and stuff like that. So we see 4, then you kind of have to worry, but, you know, it's not over. But once we get in 8, you know, that's bad news. It's had a pretty good pullback here, 20 points from the high. So, okay, yeah, thanks, Dave. Anyone else? Questions, comments? Okay, I'll take a quick peek at earnings. So only got 6 open trades right now. Nothing happened to movers. So most of them have been the runners. So yeah, we got 4 bearish runners. Yeah, 2 up, 2 marginal, 4 closed out. All those hit their profit targets. So now those have been performing. With 4 more open there. So that's the bearish runners, the bullish runners. And we're only a month out to the next earnings release. 2 of these are down pretty good. Most of the close ones did well though. Yeah, we had that one Nike, but the rest of them hit their profit targets. So 8 hit the profit targets, 1 marginal loss, and then we got 2 here kind of dragging things down. That's a utility and that's trash waste management. So let's see, 1020. This one's probably getting close to being over. Yeah, this one's maybe some more time here, but we'll have to keep our eye on those 2. Overall up there, up on the bearish runners. Bullish pre-runners, I think we're done. Those, ended up, but not like a banner quarter. It started out good, but we had to hit some lizards here at the end as the market rolled over, but started out pretty good. So overall, profitable there. The non-movers have been obviously the best ones this quarter. And then I think Ball Rise had a few, we're down a little bit here. Yeah, so this one's been the bad performer, the Ball Rise. So that's it. We're winding down on the quarterly plan here. Pull it up real quick and yeah, so we got some more bearish runners coming. Couple, looks like they're all bearish trades right now. So maybe the market's going lower. 89, that one's off the table. So yeah, so we got some bearish trades left here. That's it, not too many left. And that's it. Any questions on the earnings?
Dave, again, kind of a sort of a interest / question. And you guys, by the way, provide tons of good candidate work for us. So again, I always thank you for that. One thought that has crossed my mind a number of times is that I wonder how the plan performs early in the earnings season versus later in the earnings season. And it's, I don't know, it's the reason I asked that, or the reason why that's crossed my mind a couple times, is that early on there's not much information known about what anybody's going to report, right?
Right.
But then once a couple of companies and key industry groups report, then then a lot of other companies that are their competitors or whatever are go up and down in like kind a lot of times up until they report, and then sometimes that reverses, because they're competing and they may not compete as well as the first reporter does. But there's more and more information available as the earnings season progresses, and I wondered if that favored or disfavored any particular strategy that we use during the our earnings trades. Just whether you guys ever thought about that. Probably, maybe you think about that all the time, and anyway, do you have any kind of feedback on that thinking?
Yeah, well, I'm sure we haven't done analysis as far as that, but I'm sure, like as sectors, certain companies and, different sectors like blowout earnings, raise expectations. I'm sure the enthusiasm for the other, stocks in that sector, those things will get run ups, and likewise for, things, reporting negative stuff, you get things running down. I'm sure, that correlation, applies, but we haven't done, enough analysis on that.
I'm not asking you to do that. I'm just wonder what you thought about that.
Mhm.
I would think that later on, with more information, the later reporting companies would just tend to be a little, maybe less volatile, because there's already some information about the industry that they're in and that's known. So
Mhm.
maybe a strategy like, iron butterflies might work better earlier than later, for example, just because of that.
Yeah.
I think the reporting later just might have a lower implied volatility that's associated because of that anyway, and that might, take out the difference that I might be expecting due to the the earliness or lateness in the cycle that that particular company might have. I just, something that retired guy with nothing else on his mind wonders about it.
Yeah, well, that's a good point. But I mean, if you think about all the backtesting, if Walmart's reporting like at the end of the earnings every time, that's probably factored in for, all the premiums and stuff in the past. So unless they're changing, when they're reporting during the season, most of that is at least priced in, into the back test.
I like to trade the pre-runners in one way or another, maybe not exactly according to plan, but in one way or another, just for that fact that I think those are the ones least likely to be affected by, news, and to act more like they have historically than any others, the ones that report earlier.
Yeah. Well, I mean, before, most of the earnings come out, I think the general expectation is it's going to be good earnings, right? So, like those early pre-runners should usually do well, I would think, then numbers start coming out and, things can change after that, So, good points, Dave. Joe, did you have anything to add on that?
No, I think, probably as you said, Josh, the back testing takes, some of that into account, but, when we have time, might be worth, looking at it, because it would seem to make sense.
Yeah, I've been meaning to do like correlation trades too. It's like, okay, I did a little bit of analysis on that, but haven't had enough time to do thorough, but like, okay, Visa's reporting, what if I do like, a straddle on Microsoft, on MasterCard, how does that, because you're getting sympathetic move and the options premiums aren't crazy like, for the earnings, but, they have to have separate earning states. I think that could play, but you have to find well correlated assets that have earnings, fairly separate, so you're not paying huge premiums, right before the earnings on them.
And one of these days, we will, be able to, do some homework on some of the excellent ideas that, all of you bring to the table.
Mhm. Okay, well, that was it. Joe, I'll turn over to you.
All right, Josh, let's see, just a couple things. Let's get the screen up here. Couple charts. Let me go back to our new UI. So I want to start with, there's last week's snapshot of, our meeting, and, that was how things looked after last Tuesday's close. As Josh pointed out, NDX had changed. To me, there was, and if we're just talking about the left-hand side in the sector overview and the market overview, there was one key change in my mind, besides NDX. You know, in the course of the week, this is where we are today. And, you know, I will give you a hint when I pull up this spreadsheet, and that will be the XLK. Okay. Going backwards here, XLK, you know, a week ago was still in state one at 110 days. Okay. We've talked about that being, you know, potential leadership for the market for a long, long time. And you can see it made our top 5, you know, longest state ones, you know, going back to 2007. And, you know, our super support and IT specialist behind the scenes, Sandeep, I just asked him, you know, could you pull out the 5 longest XLKs? And lo and behold, you know, our recent run ran up or made the list of 5. But, you know, as I looked at this list, you know, I always like to go back and say, okay, when were the longest runs? And, you know, none of them were recent, you know, except for, you know, this recent one. You had to go back, you know, 5 years. So then, you know, I get to thinking, okay, does XLK, and again, just thinking about leadership, how did the SPX do, you know, in these periods? And, you know, it still kind of surprises me that it's been so long since we had a state one run this long in you know, XLK. So I go back to, you know, the number 1 period, 2017 to 2018 at 145. And when, you know, we've talked about the longest runs in the SPX, you know, that is one of the periods that matches the longest run in SPX, basically September of 17 to February of 18. So that to me is really one of the biggest changes in the last week, you know, going from, you know, state one in XLK, and it was literally last Wednesday when we rolled over to, you know, state 2. So if you get into the, let me see, so I get, here is XLK, and this is just kind of the you know, the recent chart in XLK. You know, it was a heck of a nice long run, you know, coming back to, you know, early March, you know, was the run in XLK. Here is the period, and actually let me back up here a second and move up. You know, what we're talking about in state 2 is a very short period of time. It's similar with NDX as well. You know, average time in state 2 is just 9 days. So it'll be interesting to see what happens over the next week or so. So I did want to pull up just how did the charts look, and I'll get to SPX too. I think I actually mentioned this last week or the week before when we were analyzing the longest, you know, state 1 periods in the various indexes. And this particular period, when we look at 1 year out in SPX, you know, my notes say, you know, basically after we rolled into state 2, and then the following year, what kind of move did you get in SPX? It was 1%. Here's XLK, you know, for this extremely long run starting in 2017. You know, we got a state 2, and then we got right back into, as Josh likes to talk about, the stepping 1-2-1-2, you know, until the end of 18. And we all remember that period in 18 was real volatile. There was the interest rate scare. The market sold off hard, and then, you know, up we went into the pre-COVID highs. So that's kind of the action in XLK after the long run, 17-18. Here is, you know, as I showed earlier, just the recent XLK chart. So certainly we would have room, you know, from a retracement basis, on a pullback. But, if you go back to 17, we didn't have many pullbacks for quite some time. So it'd be interesting. But again, Dave, you said you're watching Apple. Just important to watch, I think, this index, in the short term. Pairing that up with NASDAQ, same thing, as Josh pointed out, lo and behold. So NASDAQ, longest periods in state one range between the top 5 were anywhere between 108 and 145. This particular run, we got 95 days in state one. Okay. So, here's the current chart in NASDAQ. Certainly we have, downside retracements. Josh laid them out, cleanly. I think a 3/8 retracement of the move from the March lows is about 100 points lower in NASDAQ if we're going to get a meaningful retracement. But similar to XLK, your average time in a state 2 is 9 days. So not a lot of time. And again, that's just the average. So dear, there you go. You can see the maximum period in state 2 is 34 days. One of the things, you requested last week. That's in the, you're welcome. That's in the new UI. That'll be on the overview page too. But, it just gives us, that larger period perspective. So let's see. And here's NDX. I just wanted to give that same period in 17 to 19 when we had the long state one run-ups, short pullbacks, and then we ran again into the fall of 18. So, a chart looks very much like, XLK, which is not a surprise. So, and then same thing here was, SPX. Here's the 2017 to 2019 time period. Year over year was a 1%, up move after that, exceedingly long state one. And, here's just the short-term SPX chart, which Josh had pulled up earlier. So, and SPX, yeah, where are we? We're at 90 days now. The top 5 range from 108 to 145 days long, that average being 126 days. So I just really wanted to reflect on leadership out of the XLK and where we are from a retracement standpoint. There could be lots of room to the downside. Just kind of have to wait and see. I honestly don't anticipate a big downside correction, but time will tell. So happy to take any questions. That's just what I wanted to talk about today. So Josh, back to you if no questions.
Okay, anyone else? Open format here. Any questions, comments before we close up?
One final comment from me here, for Dave here, is that one of the things that is, I think, a really good way to get a near-term pulse is if you just look at the dashboard, just like you're looking at it now, and look at the pie charts for right now, a week ago before that, and a week ago before that. I think that gives you a 1 week quick just click through, gives you a pretty good idea of kind of like the near-term sentiment of where things might be headed. I think that's a good tool.
Mm-hmm. Okay. Yeah, I agree. A lot of that was Sadir's idea. The pie last week, current.
That's
Yes,
off
it
to
was.
Sadir.
He's full of good ideas.
Never short on opinions.
That's a good thing.
Okay,
And
anyone?
I have one last question for Joe,
Yeah.
if he can hang on for just a second.
Yeah, Dave.
Kind of like with respect to that. So Joe, we had a couple conversations in the past, and with regards to like feedback on the how things are going to look compared to how they used to look. I've been trying to figure out how to like provide the best feedback for that. And so I'm kind of several times it's like, well, do I, where would you like feedback maybe to be organized if there's such a, if we can try to do that. For example, when I could look at, okay, when you first come into the platform, you see the dashboard. So it might be good to organize any feedback on like the dashboard first and any observations and feedback for that. And then to maybe go to wherever the dashboard might take you is one thought. Personally, I've been trading for a long time. So my perspective isn't from like a very new person. It's from a like, okay, how can I do better what I already know how to do somewhat? And that's kind of how I potentially will look at this and organize my feedback on, well, how, if I'm trying to do this, what could make that be easier with the new your new platform. Any response to that? I've started a couple of times and got a bunch of notes, but I'm not exactly sure how it might be more useful to you guys.
Josh, I'll jump in and then obviously offer your thoughts. And I think, as we move forward with this new UI, if, anybody on the call would like to have the opportunity to just have the new UI, we're happy to, give that to you and see how you like it, offer your feedback. And Dave, my thought is, trying to keep it as efficient as possible. We just jump on a call, and talk it through. That would be my reaction. Josh, I'm not sure if you have a different feeling.
Yeah, I mean, any feedback you guys give us worth our time. So, however you want to structure it, it's fine. I mean, you can go page by page or in overviews or just sporadic ones here and there. As thoughts come up, it's fine. We're just whatever.
Well, I suspect any feedback might be better than no feedback, but it might be very useful to get feedback in any kind of way. If you come to a conclusion in the near future that, hey, we'd like to focus on this or that or the other thing, let me know. I'll do that.
Okay.
One question I kind of have, kind of like just as a general question, and you guys are developing a new platform with some sort of a target audience in mind. I got to believe anyway, it's hard to be, well, we're going to provide everything for everyone possible. That's a difficult situation. So if I had some idea of who you might be targeting, I could maybe, I don't know, and I'm not, maybe that's a hard thing for you to answer. It might also be able to help me focus on areas that are more beneficial to you, and however I see goods or bads, or things that I might change, or things that I really love about the new platform. So,
well, Dave, I think in terms of,
for example, would you be more interested in brand new people to options, so that you have the the edge on all the other competition with the the features that you have that nobody else has, or is it like, well, we from Delphian's perspective, it's probably might be better to have a appeal to active traders first before new traders. I don't know. So I don't know, and I don't know whether it's good or bad to even try to share that. So if you say, I don't know, but so I'm looking for any suggestions from you guys as to, and I'll just provide whatever I think anyway. But if you want to sort of direct any feedback, please do, or feel free. It's kind of where I'm coming from. But I'll give you what I think anyway.
Yep. and that's good.
All right. So anyway, good luck to everybody, and we'll see you next week then.
Okay. Yeah, anyone else? Thanks, Dave. Okay, we'll close it up and do it next week. Thank you all.
Thank
Good week,
you.
everybody.